For the first time in history, oil drops below zero. Why did it happen, and where's the opportunity? Coming up. Hello traders, the oil crash today was insane, and the biggest insanity happened in the May contracts where oil actually went negative. That's right, it became so invaluable that you actually had to pay other people to take it off your hands instead of buying it. All right, that is nuts. It's the first time it's ever happened in history. And to give you a little idea of what this looks like, I'm going to pull up this chart here. And so here's the May contract in the futures, and on NinjaTrader it doesn't even go below zero apparently, but you can see price comes all the way down to zero. Absolute zero, and then stops. But that's not really the truth. The truth is it went much further than that. So we've got this chart over here from barchart.com, and you can see that it dropped almost to negative $40. It went down to something like I think it $37 basically, hit or miss. It went to negative $37. You would have to pay somebody $37 to take the oil from you, because long story short, they're kind of running out of storage, right? And if you have nowhere to store it and nobody else wants it, what are you going to do with it? It makes it pretty invaluable. It actually makes it a nuisance. So it was a 305% drop. So that begs two questions. One, why did that happen? And two, are there any opportunities here? And of course, the first thing I need to say is I'm not an investment advisor. Don't take anything I say as investment advice. You'll probably lose money if you do. Okay, this is purely for entertainment purposes, but I found this article and I think it's very interesting, and I recommend you go read it. It's on oilprice.com, and what I find interesting about it is it's not from today, it's from a month ago. It's from March 23rd. The real reason oil prices crashed. Okay, so it's basically the exact same thing going on today, except for the fact that they're just running out of storage, and that kind of just exacerbated everything. But if you go through this article, I'm not going to read it to you. I'll just give you a couple of highlights that I read. But the bottom line is Saudi Arabia and Russia are kind of in a tiff right now. They're competing with each other, and then the United States, who used to never really be a player in the international market due to fracking and shale and all of this, has kind of got an excess of oil, and so they've become a player in the international market. So now you've got more competition bringing more oil to the market, and Saudi Arabia, and they've done this in the past, they have a couple choices. They can kind of try to strike a deal to curb the flow of oil to meet the demand level. So right now they're pumping out too much. There's too much oil for the demand, too much supply. All right, but instead, and like I said, they've done this before, they'll just start producing more to drive prices down on purpose, and they're trying to put out their competition. Now, it has worked in the past, but it also hurts them at the same time. So not only do we have all this flood of oil coming from the US where it didn't come from before, coming from Saudi Arabia, who's kind of trying to drive down prices, but at the same time, you've got COVID-19 going on and everybody's staying inside. You know, if you've been driving out on the roads, you've seen how empty they are. It feels kind of like a ghost town. And so nobody's using the oil at the same time. And there's only so many places to store this stuff if nobody's using it, and yet you keep producing it. Okay, so it just kind of ruins the value. Now, the June contracts are still worth like $20 or something like that, so there's still value in oil, but I mean, it's unprecedented. This is historic. It's the first time in history. So the thing is, you could probably, you could try to take a shot on an oil ETF, something like that. But I think that maybe a better play, and what I've been looking at doing, is potentially getting into Exxon. And then if you want a cheaper stock, maybe Halliburton. Not yet. I mean, keep your eye on them. Exxon has been a killer stock over the decades, just an amazing stock to be a part of. And they've been hit pretty hard during this, so they're down quite a bit. We'll just pull up their chart here, and you can see for yourself. I mean, do your own due diligence and see what you think about Exxon. But I think this could be the play. Plus, they're diversified, so they're not just in oil. Gives you a little bit of protection, because some people think that even though it went negative, that oil could drop further somehow, and that it could be a long time before it ever recovers. So picking the bottom, of course, of anything is sort of an impossible task, but just try to get in a point of value. So if we go back, to 2018, it was riding pretty high at $88. And then it's been sort of in a steady downturn since then. And of course, crashed with everything else during the COVID crisis here. And so it came down to a low. It got all the way down to almost $30, and now it's kind of hanging around in the $40 range. But Exxon's one of those companies, and this is kind of the strategy I took back in like 2008 market crash was, what company can I not see disappearing, right? And so I invested back then, I invested a decent amount of money into Caterpillar at like $25. It ended up going about $160, and right now it's about $112. But I mean, there wasn't a genius play or anything. It was just, I was just like, what's going to be around? What is going to need to be used in the future that's just probably not going to disappear? Exxon is just one of those companies. I mean, the price of the stock could crash for all I know from here on out. I mean, God knows what's going on right now in the world and in the stock market. But that's what I think. If you're looking for an oil play, you could go for that one. The other one I mentioned is Halliburton. I'm not as big on that one. And as you guys know, I'm more of a futures day trader anyway. But Halliburton's, I mean, they've been hit hard for quite some time. I mean, goodness. So January of 18, they were at 56. Now they're down in the $7 area. So there's the two potential plays of value. But that's it. I mean, the main thing going on here is just the absolute ridiculous historic crash. It'll be fun to keep your eye on it to see how low prices will go at the gas pump. The last time I remember prices being below $1, I lived in Tulsa, which was a huge producer or refiner of oil. So prices in Tulsa were always lower, and I had just started driving. It was a couple decades ago. I was 16. And prices were like 85 cents, 90 cents. And the day it hit over $1, we all thought the world was going to end. All right. And then it started getting up to like $4 and $5 and $6, depending on where you lived. And now we're kind of back down in that $1.50 range. Or of course, depending on the part of the country, I'm waiting to see if we can get back down to teenage levels. That's it, guys. Have fun. Happy trading.